All right. Akceleratorsorg.com. Jeff Bruno with AkaShawnThomas's group. Glad to be here today again. Sorry, last day of the month here for Akceleratorsorg.com and Jeff Bruno, your mentor session. So I am sorry about that. Some mix-ups in the last week or so, but let's get started. And it looks like we're going to probably do about 25, 30 minutes today. I only have a few questions, which is fine. And what I'd like to do is give some feedback about some things that are going on with me and our business, and some thoughts about the current environment real fast. If you go to Yo CFO or Your Outsourced CFO on LinkedIn, starting very soon, we're going to be doing webinars, or I will be doing most of them. There'll be about 5 to 10 minute, not webinars, excuse me, 5 to 10 minute quick little clips as important thoughts, sort of monthly. Probably do 2 a month or so. And so check out our LinkedIn, Your Outsourced CFO. There'll be good thoughts about business tips, just general things to look out for during that month, things like that, and stories about how our clients have dealt with these things and so on. And so please take a look at that as more resources for you. I also, would like to note that I've had success so far with a few companies doing PPP forgiveness applications. Processes are varied widely between banks, but if you have not already, try to see if your bank is ready and get your PPP forgiveness applications in. The SBA is not totally forgiven them yet, but I've got some banks that have said you're fully forgiven after they reviewed our information. I have that in our records. That's a good thing for you to have, especially as the year comes to a close here for businesses. Also, some news today. Looks like Mnuchin and the Democrats are trying to get together on some more aid, which, unemployment, maybe a $1,200 check to people, and some small business support, which is definitely needed. A lot of industries are still struggling heavily, including restaurants and businesses in that nature, hospitality. So we're hopeful for that. So with that, I'd like to dive right in. Any questions? Anyone who's live, welcome. And I'll jump right in. So we'll start with the questions. First question is from Marlena Carter. So Marlena Carter says, what is the best thing to do with excess capital or cash in your business? Her business is a pet grooming business. And what are some strategies to make more money with this excess cash in the business? Should I take it personally and invest it, or the things I can do with the business? So, Marlena, I get this question frequently, and congrats on having more cash in your business as you grow it. But investing it for a return of sorts is probably not your smartest scenario. One, there's risk there. If you go for higher returns, there's a risk-reward factor there. You could lose some of the principal. If you really want low returns, you're talking about 1, 2, 3% returns maybe for secure investments. If you have $100,000, it's $1,000 to $3,000 a year of interest. That's in a year. Not a great way to probably invest your money at this time. So one of the other things, then you got to look at, well, what can I do in my business? So there are a lot of things you can do with the extra cash in your business. So one is make sure you pay your tax estimates. If you have extra cash, you probably have profits that are passing through to you. So make sure you pay your IRS IRS and state estimated taxes on time, September 15th, January 15th at this point going forward. That way you don't have penalties or interest on unpaid taxes. Also, maybe there's a way to bonus some of you the money. If you have an LLC, or if you have if you're a S filer for election purposes, you could probably bonus the money to yourself at the end of the year as a W-2 type structure, pay the withholding taxes and do that. So that's another way to sort of get the money in your pocket You are going to pay taxes on it, but that's one avenue. Consult your tax attorney about that, or tax accountant about that. But really, those are all sort of like normal things. What I would do is I would look at the buying power that you have in your business. So, can you, towards the end of the year, you said you're a pet grooming. Maybe you have to buy pet grooming supplies. Maybe you need to buy a piece of equipment, things like that. You could stock up on that stuff towards the end of the year. So, especially if you're a cash type filer or a cash business, which I'm sure you are right now, you could stock up on that stuff, and maybe they'll give you discounts. So maybe some of those suppliers will say you normally buy 20 a month, you're buying 200, and you could support the volume coming into the next year in the first few months of the year. Buy it and go for a discount. See if they'll give you 5, 10, 20% off. That is real tangible money. So if for an example, let's say you buy $5,000 of product, and they say we'll give you 10% off. That's $500. On $50,000 of cash sitting in your bank, if you were to invest it, that's 1% return. You're getting 2 or 3% maybe safely. So immediately on some product buys, you've gotten 1% return for the whole year on your investable money. So those are ways to do it. You can pay down all your expenses. You could buy another van, buy a truck, buy something and fully depreciate it, and help you with taxes, or just excess cash. Now you have more assets to lean against, things like that. Anything to do to build assets in your company with the cash other than cash, or put in your pocket, are ways to go. Another thing to think about is leverage. So outside of the tax play, if you're looking for leverage to grow your business, you could go to a bank and say, look, I will pull this money aside, use that as collateral, $50,000, $100,000, and give me a line. And you're like, well, why would I get a line? I would just use the money, use the cash for that. And yeah, that's the answer too. But now you've started a bank relationship. You show them that you're using the line. And when I say use the line, that's what banks want to see. If you get a $100,000 line and it's secured by $100,000 in cash, you want to use the line. The banks want to see you use it. They want to see you buy product, use it, sell the product, pay the line down. That's what they want. Yeah, you're paying a little bit of interest, but you're getting a strong bank relationship. You're building up that rapport. And then eventually, let's say the next year your cash flow is even better. They'll say, forget it. We don't need the collateral anymore. Take that cash off of the line as collateral. Now you have a line that you can use for business growth, free of that constraint of the lien on your cash. So those are some plays you could do if you're very strategic about trying to continue to grow your business. So hopefully that was helpful. Next question is from Allison Koyanagi. Now Allison is her business looks like a digital marketing agency, but she's asking, would you recommend self-funding or getting an investor for a new product-based business? So, Allison, you actually, I don't know if Sean brought this up again for some reason, but you had asked me this on our last 1 or 2 mentor sessions. I think it was the last one last month. So I answered it. And to be very specific, I went back and checked for you. And on the last one, I discussed it between 15 minutes and 27 seconds and 20 minutes and 34 seconds on my session. So go back to that and reference it. I give a lot of details there. No reason to fully repeat myself. And it's there. So take a look. So the next submitter is Roland Bernath. Roland asks, how do I determine what is the right percentage of profit for me to negotiate when I'm a distributor for a manufacturing company? Business subscription. I've received an inquiry to export a famous Hungarian chocolate brand to China. I've contacted the manufacturer/brand, received pricing and packaging details. I am aware the Chinese partner could go directly and purchase from the factory, but they'd rather have me do sourcing and logistics. They want to focus on selling the product in China. I have a hard time figuring out what is a percentage of profit I can calculate after I added logistics and other costs I incur. I can simply multiply 1.3 or 2 times. The obvious risk is what is within the threshold of them accepting the price for the work I do. Is there a calculation form for something like this, and how do I find out industry standard for this type of arrangement? Thanks. So, Roland, these are great questions, honestly. And I would want to dig in heavily with you on this because, one, you'd want to look at industry metrics. You'd want to look at, distributive networks for this type of product. We have an industry tool we use called BizMiner. It's pretty good. It's for smaller companies. So you might want to take a look at that. There's a cost to that, but that's an avenue to see sort of if there's some industry profit margins to look at in a distribution fashion for a smaller company. But that would just be a line in the sand essentially for you, or a baseline. Really, what's the market demand? So for example, we were working with some some clients with PPE, and the market demand was humongous, as you can imagine, with coronavirus. So the markups, as the supply chain was coming from Vietnam, China, Eastern European countries, were delivering this product, the markup was substantial across the supply chain. So whoever was able to handle those logistics and felt comfortable fronting the money to get the product could see big returns. For you, obviously, it's not going to be that scenario. But it's hard to say. It's dependent on industry. So what I would ask is ask your Chinese partner, what are they willing to pay? Be upfront with them. Look, hey guys, what are you willing to pay? Because it's always good to get as much research, to be honest, around that and see what they say. And they could be negotiating. So if they say we're willing to pay, I make something up, $100 a packet and it costs you $50. Okay. Now you have a 2 times market. You do some other research. Maybe you test run it for a little at that price point and say, look, I just can't supply this. I need to go to 120. But see what they're willing to do. Because if they're willing only to do a certain level and you do some cost analysis and you're only at a 10 or 15% coverage on your cost, it's not going to be worth it for you. So that might be step one. Or maybe they say something, you go back to them and say, look, guys, I can only do it at X. They say, okay. And then you're at a starting point. Obviously, look at the costs you have to incur, because there's a cost here of holding the material or at least holding in transport. You might have to pay your manufacturer the second they ship it. That's typical. They're going to want receipt of payment probably before they ship it while it's at the dock. They'll want receipt of payment. What's that time frame from that until it gets to the Chinese, and then what is the Chinese seller, and then what does the Chinese seller say before they pay you? Will they pay you upon receipt of the goods, or do they want 30 to 60 days or 90 days to sell it and pay you? That's really the trickiness of the transfer of the money, because you're holding that along that whole supply chain. That's what the Chinese sales group doesn't want to do, probably, along with logistics and so on. So be very cautious there on terms with everybody. Try to negotiate the best scenario for you in that, because the last thing you want to do is get stuck holding that in any fashion along the chain of logistics there. And will the manufacturer be willing to give you volume discounts too, is another consideration. If I buy 100, if I buy 1,000, if I buy 10,000, that could be up to you on your individual cash flow, and you might be able to get more profit there if you can buy, hold, and then ship to your Chinese partner. So I think those are a lot of the questions you need to figure out. But of course, I'm always curious about these things, especially import-export. And is there I assume this would all be in dollars too. That's currency can be a problem here. Usually done in dollars. And then you know, that's it. There's other things, but I'd have to dig in more to get more information. So hopefully that was at least a little bit helpful on some next steps. So next question. This is from Nick Berenti. He's asking, when is the right time to hire an outsourced CFO? I have an HVAC company doing over 7 figures. Congrats. And want to expand. Maybe do more locations or some small acquisitions. How could a CFO help me during this process? Thanks. So, Nick, first off, again, congrats on getting over $1 million. And the right time to hire an outsourced CFO is probably now, especially since you're considering new locations and a new or acquisition. 2 very different things, by the way. But and you at least want to have complete and total, let me emphasize this, complete and total clarity and understanding on what your numbers are, what your metrics are. So let me dive into it a little bit. So what's important here and why an outsourced CFO, and I would say you want an ongoing outsourced CFO. You don't just want someone to come in, maybe clean up your reporting, bring more clarity. You want somebody really to have the strategic insight that you need on evaluating new locations, acquisition targets, cost analysis of it, so on and so forth. So some examples. What is your contribution margin? So that would be my first question to you. You're an HVAC company. Let me explain. What are your variable costs versus your fixed costs? So, in your industry, variable costs most of the time are going to be labor, like the contractors you're using, or even internal labor, probably by the hour, and your materials. Full stop. So, what is that contribution margin? Let's make something up. A job's $50,000. It's $25,000 in labor and materials. You're making $25,000. That's probably a little high. Let's say you're making $15,000 all in profit on the job. Okay, so that would be your contribution margin on that job. So that $15,000 then falls to the bottom line on your expenses. So then you have your cost, sales and marketing, rent, other tools you need just to run the normal day-to-day, maybe machinery, internal back at the shops, not on site, things like that you need, vehicles. So there's those questions. So when you're looking at startups, like a startup location, you need to know, well, and I'll give you a specific example here, see if it helps. What does it cost to get that location up and running? Let's make an assumption. Let's say it's $150,000 to get that location up and running. Cash in. Deposits on rent, build out of the space, whatever, labor costs to get it up and running, all that. So $150,000 in a few months. Let's say that your utility bills, your tooling, your other fixed expenses normally per month are $10K. So let's make, for easy math, an assumption your contribution margin on your projects is $50,000. So every $100,000, you get $50,000 towards your other expenses. Okay? So in that analysis, on a monthly basis, if your costs are $10,000 in overhead and other costs, at a 50% contribution margin, you need $20K in sales to cover your space in the new location. So you need $240,000 in annual sales to cover that location. That's just to break even. That's no profit. Then you put $150,000 in. So very simply, where's the math? You need $300,000 in profit to recoup your investment of $150,000. So year one, to break even on your investment and what you have ongoing on fixed expenses, you need $240,000 plus $300,000 in new sales, and that's with no hiccups on that margin. And I'm thinking your margin's lower than that. So ultimately, your contribution margin. But let's assume it's that. So that is $540,000 in sales in that new location in year one. Maybe you say to me, you know what? I don't need that 150 back. I can wait. I don't need all that cash back right away. 2 years is my time frame to get 150 out of what I put in. Okay, then you reassess, you evaluate that. But maybe you need to start making money you need the money back and making money year 2. Can you do 540 in the first year? Is that feasible? Do you need a salesperson in that new location to bring that in or to help feed the location? There's so many questions to make sure you're doing it right. And then, what else? But then there's the question of acquisition, which is a very good one. Acquisition is a totally different scenario. There's a lot more risk with acquisition, a lot more unknowns. So, are the quality of earnings good of the acquirer or of the seller? So they say they have set contracts with 5 different homeowners associations where they do the HVAC work all the time. Are those contracts real? Do they have 2 years left on the contract? Can you assume that? Are there nuances in the contract that say a new vendor that gets them an out to get out of the contract? So you come in there, you sign up, you think I got these contracts, I got $1 million in the next 2 years, all ready to rock and roll, and all of a sudden the homeowners association says, "Oh wait, new vendor? We're going to now evaluate our vendor pool and we're going to put it back out to bid." Oh boy! Now those are the due diligence items in an acquisition that you got to make sure quality of the revenue you're acquiring. So then the question is, was the group doing good work? I mean, you probably want to assess, since you're an HVAC company, you probably want to assess, was that work done, so that you don't come into a scenario that's tape and bubble gum, and you have to now fix all these problems that they've been doing. Very scary on that front. But maybe it's just an acquisition of a one-person scenario. Maybe that person, has a book of business they consistently do about, $250,000, $300,000, $400,000 of work a year, and you feel very comfortable from talking to some of their customers and so on that they could do that, and you're going to come in and guarantee this person's salary for a year or something like that. Much lower risk, good way to expand your business. So sorry, a lot of stuff there, and actually extremely intriguing to me, Nick, on the HVAC expansion. Exciting stuff. Also, be careful about your capital. Make sure you have enough capital to do any type of expansion, banking or personal capital, just in case. So, next question is from Tatiana Blood. She asks, how soon in the process of a new business should I start using financial software like QuickBooks? Her business is, I am doing research and development on a new product. I'm paying expenses out of pocket right now and wonder when would be the right time for me to start using QuickBooks and get a business checking account and all of that stuff. Thanks. So, Tatiana, I'd have a lot of questions for you here. One, when you say you're just starting this and spending money, are you spending your money, or do you have an LLC set up, a business set up? You said you were asking about, business checking account. So I'm assuming you don't have that stuff set up, but if you're spending your own money, there's something where you could do a Schedule C on your tax return. This is very tax heavy. There could be a way to write down some of that stuff, but be careful here, because you could be using a lot of after-tax dollars here to invest in something that in theory should be expenses that you can either carry forward against your income, future income. You must be getting income somewhere else. You want to make sure you can write that income off, those expenses off against that income. So if you really feel like this new product has some legs after your initial research, I would start all this stuff now. I would probably start an LLC, very, very low cost. I know a group, Worthington. His name is Bob. He does it for us for clients for like $200. They'll get you an LLC set up, filed with the state that you're in. Bob Worthington is his name. I can send you the contact information if you like. Literally between 200 and 250, he'll set you up with everything. And QuickBooks, if you just do essentials, might be $20 a month, $25 a month. I would highly recommend you do that from the start so you can have a good record of your expenses, and your tax accountants can figure out how to use that to carry information forward. And then when you're ready to go, you can always stop the subscription for QuickBooks Online. So it costs you $25 and keep recording stuff there. I recommend right from the beginning doing that. And without any much more information, that's as far as I can really go there. But I think you should start recording that electronically, and probably get a bank account. So, so it looks like we're already at our last question. I knew this might be a little bit quicker today, which is fine. So it's from Kelly Killingsworth. He asks, is it finally time to make a smart decision? Is it finally time to make a smart business decision to move out of California? Do I move now before I am too invested, or grind it out here? Kelly owns a construction company and he's moving towards heavy equipment operations. California is not getting any better. I feel it's going to get worse tax-wise and going to get difficult to maintain or even grow a business. And I feel it could possibly be more profitable in another state. Say North Dakota, for example. I don't want to buy expensive equipment and then make decent money only to give 54% of my earnings back to California. Business-wise, to grow into seven figures, California doesn't seem safe to do so. Please, mentors, shed some guidance on this subject. Kelly, I know we've been chatting a little bit too. So, Kelly, here's the deal. Profit has nothing to do with it. Meaning, let me be clear on that. Yes, you're going to pay a lot more in taxes in California than other states. Hands down. California is the worst state. The only one next to that is maybe New York as far as taxes. It is extremely onerous for large businesses and small businesses alike. So, the thing is, you might have a lot of business in California. So, the home prices could be higher. The amount you could charge could be higher. So, it's a dollar and cents thing, Kelly. While you might be paying more to taxes, you might be simply be able to make more profit. So you got to look at that calculation. That's an important first thing to look at. And also, I know this centers around tax, and I'm not the expert here, but I am on reinvestment. I've done a lot of reinvestment thought process. As your business grows, you can, for a while, defer some of the tax liability, not all of it, but some of the tax liability as you grow. What do I mean? You said you're buying heavy equipment. If you're going to finance or buy heavy equipment, you can write that off. So as you hit growth levels, you can continue to use your cash or your profits to buy equipment and fully depreciate it. Equipment's fully depreciable in 1 year up to a certain level, 250 or 500,000, but you could do that. And now you're acquiring assets with your profit. You're not paying taxes. You'll pay some, but you're not paying a large amount of taxes because you're writing off the equipment that you've purchased with your money. So, and you're paying down all of your expenses too. And prepaying things in years where you, like for example, this year you could prepay stuff and make sure you pay zero taxes. As you grow, that gets harder and harder to do. To continually, you'll pay more and more taxes, but you can do it in the early years very well to offset that. So I wouldn't worry too much early on in your business, especially you just starting out, where you are. You could always move later. It then comes down to, of course, your network, your ability to sell, and again, the market. What are the price demands? So, if you have a good network and your ability to sell in California is strong, don't leave California right now. If you can slowly dabble into a network in North Dakota, maybe use North Dakota as an example. Maybe you get one guy or person out there to help you sort of feet on the ground, evaluate stuff, start to dabble in some small jobs. If that starts to seem like a profitable market for you, and you want to say, forget this, I'm moving there because you're mobile, and kudos to you being mobile, then for sure, go for it. It's 1848 gold rush, man. No, I mean, take the wagon and go after the gold. But, drive the equipment to North Dakota. Just like, Pennsylvania and Ohio and other areas with the fracking. Laborers jumped to that and been making tons of money up until the last couple of years when fracking became huge. So by all means, man, I'm all about you going to low tax area, compiling cash, so on, and then sell your equipment, move back to California, do something else, or whatever. Keep working there, whatever works for you. I'm excited for your thought process. But right now, don't worry too much about, especially if you're buying equipment with your profits. Don't worry too much early on about the tax piece in California. Love to chat with you more about it. Hopefully, as we can help you out a little more. Those were all of the questions, and quick mentor session. I'll probably do mine a little bit earlier next month since I got off to a late start this month. Probably about 2 weeks or so. So anyone think of questions as we get close to the end of the year? A lot of considerations out there, guys. Make sure you're not over inventorying. Phantom tax hits a lot of businesses early on, startups. Be careful. You buy your products that you want to resell. You store it. You have high inventory counts. And you have to pay tax on stuff you haven't even sold, because it ends up being a profit construct. Be very careful there. That's inventory management 101 for businesses. Be careful with your AR and AP management. If you're a cash filers, guys, be careful. Towards the end of the year, don't take big checks in and then pay tax when all the expenses didn't get paid out at the end of the year. Very, very careful. We counsel businesses on all the time. Now, we don't deal with the personal pass-through taxes and all that, but we sort of help manage the profit analysis for the business. So stay on top of it, push hard in the end of the year, and let's set ourselves up for 2021 in a strong way. Very excited for everyone who's had success so far, especially in this environment. I'll be around. Best of luck. Speak next time. Ciao.